Hello, everyone. Rhino from the Diz here to talk about some of the highlights from the Walt Disney Company's third quarter earnings report. So, I don't have a ton of visuals to go along with this one. I apologize, but I just wanted to go over some of the more interesting things that came out of the earnings report. So, the Walt Disney Company has released their earnings report for the third fiscal quarter of 2020, which ended on June 20th, 2020. The report showed revenue down 42% and income down 72% over the third quarter last year. Diluted earnings per share decreased 94%. CEO Bob Chapek said in a written statement, quote, "Despite the ongoing challenges of the pandemic, we've continued to build on the incredible success of Disney Plus as we grow our global direct-to-consumer businesses. The global reach of our portfolio of direct-to-consumer services now exceeds an astounding 100 million paid subscriptions, a significant milestone and a reaffirmation of our DTC strategy, which we view as key to the future growth of our company." During the company's earnings call, Chapek said that he is optimistic about our way forward. And Chief Financial Officer Christine McCarthy added that despite the challenges, Disney is still well positioned. According to McCarthy, the company saw a $3.5 billion loss in the park segment. That was offset by other segments, and that there will be an extra $1 billion in costs due to COVID-19 in the fourth quarter. It was stated that the Walt Disney World theme parks were having a positive net contribution, but that it was lower than expected. When asked about the current demand at the Walt Disney World theme parks, Chapek said that initially there were more than enough reservations to fill the parks to socially distanced approved levels, but as COVID-19 rates increased in Florida, they received higher than expected cancellations. Most of those open spots were then filled by locals and annual pass holders who typically spend less. On the topic of Disney Plus, Bob Chapek shared that as of August 3rd, Disney Plus has 60.5 million paid subscribers. Combined, Disney Plus, Hulu, and ESPN Plus have 100 million subscribers. Mulan will be released both in theaters and as a premiere access offering on Disney Plus on September 4th. This was sort of a big drop here. Disney Plus subscribers will be able to enjoy the blockbuster for an additional $29.99. When asked to elaborate more on the $29.99 Mulan release on Disney Plus and if there would be more examples of this strategy, Chapek said that they're looking at this as a one-off, not a new business model. He commented later that they are using this as a learning tool and will watch not only the number of purchases for the film, but also the number of new subscribers that the release generates for Disney Plus. Continuing with Disney Plus, Chapek was asked if the growth in the platform can be sustained with production down, to which Chapek responded that ideas were still flowing for new content and that production will resume. He added that while new content brings in new subscribers, it's the massive library of content that keeps subscribers. So now I have a bunch of numbers, and I do have a slide for this one. Let's talk about the big one, parks, experiences, and consumer products. Compared to last year's third quarter, parks, experiences, and consumer products saw a decline of 85% in revenues from $6.575 billion to $983 million. For the quarter, there was a 214% drop in segment operating income compared to last year's third quarter, from $1.719 billion to a loss of $1.960 billion. All domestic parks and resorts, Disneyland Paris and Disney Cruise Line, were of course closed for the entire quarter. Shanghai Disney Resort reopened in May, and Hong Kong Disneyland Resort briefly reopened in late June. Disney stores were also closed most of the quarter, as were many other retail locations that would be selling Disney merchandise. Disney estimates that the COVID-19 pandemic caused a drop of $3.5 billion in operating income in the parks segment. That is billion with a B. Direct-to-consumer and international had some interesting numbers as well. The direct-to-consumer and international division saw revenue growth of 2% for this quarter over last year, from $3.875 billion to $3.969 billion. Operating income loss increased 26% from a loss of $562 million to a loss of $706 million. The segment continues to see an operating loss due to costs from launch of Disney Plus, which was slightly offset by higher results at ESPN and Star internationally. ESPN saw subscriber growth plus higher income from pay-per-view events. Now, those are just some of the highlights from the third quarter earnings report. Of course, you can check out more of the highlights and the report in more detail if you head over to wdwinfo.com, or you can click the link that you'll find in the description of this video. Thank you everyone out there for watching. If you enjoyed if you enjoyed this video, please give it a thumbs up and subscribe to the channel while you're at it. If you click the little bell, you'll get notified whenever we upload any content, and that way you won't be missing out on any Disney, Universal, any sort of theme park fun and news that we have for you. So that is going to do it for me today. Thank you, everybody, and I'll see you next time. Bye.